There are thousands of stocks in the US market. But when you zoom out over 30 years through recessions, bubbles, crashes, booms, and everything in between, a very small group of companies stand out. These companies didn't just survive, they paid investors consistently in cash through thick and thin. And today, we're ranking the greatest dividend stocks of the past 3 decades, from D-tier duds all the way to S-tier passive income monsters that built real generational wealth. Now, as always, this video is for educational and entertainment purposes only. This is not financial advice. These are just my opinions based on long-term performance, durability, payout history, and overall stability. All right, let's get into it. Dividend stock number 1, a TNT. Let's rip off the Band-Aid and get this one out of the way. AT&T is like that one friend who always promises they'll pay you back next week, and then somehow ends up asking you for more money. Yes, AT&T used to be one of the most beloved dividend stocks in the country. Yes, people used to literally retire off AT&T checks. And yes, the yield still looks big on paper, but that's exactly the trap. Over the last 30 years, AT&T shareholders suffered through a destroyed stock price, endless debt, a dividend cut that shocked retirees, and acquisitions that aged like milk left in the sun. If you invested $10,000 into AT&T 30 years ago, you would have dramatically underperformed the S&P 500, even with dividends reinvested. A TNT had the name, it had the history, but it lost the discipline. This is an easy D tier, big yield, bad results. Dividend stock number 2, ExxonMobil. Now, this one is interesting. Exxon has had one of the rockiest journeys of any dividend stock on this list. We're talking oil collapses, a global pandemic, one of the worst years in energy history, and dramatic swings in profitability. And yet, Exxon has paid a dividend every single year going back to the 19th century. That's wild. For 30 years, the dividend was reliable. The stock price, kind of a roller coaster. One decade, it's a superstar. The next decade, you're wondering if oil is even going to exist anymore. Long-term shareholders did fine. Not incredible, not terrible, just fine. So while Exxon is durable, it doesn't have the long-term compounding power of the truly elite dividend companies. Exxon goes into the B tier as solid, dependable, but cyclical. Dividend stock number 3, McDonald's. Here's where things start heating up. If Exxon is a roller coaster, McDonald's is a straight-up escalator, slow, steady, reliable, moving upward for decades. McDonald's has increased its dividend for 47 straight years, putting it firmly in dividend aristocrat territory. What makes McDonald's a beast? Its franchise model prints cash. The brand is one of the strongest on earth. It survived every recession with ease, and it reinvented itself multiple times. Fun fact: McDonald's real estate income alone makes it one of the biggest landlords in the world. $10,000 invested 30 years ago. It would be worth over $130,000 today with reinvested dividends. That's the power of slow, predictable compounding. McDonald's gets an easy A tier. Not quite S, but one of the most durable dividend payers alive. Dividend stock number 4, Johnson & Johnson. J&J is basically the Michael Jordan of dividend stocks. If you grew up in the US, you've probably used Band-Aid, Tylenol, Listerine, Aveeno, Neutrogena, all under the J&J umbrella. They've raised their dividend for 62 consecutive years. That's older than most investors. J&J is the kind of stock retirees trust because it's the definition of boring. It sells essentials, not hype, not trends, just essential products that people buy in good times and bad. J&J long-term returns, $10,000 invested 30 years ago would be worth $180,000 plus with reinvested dividends. That's absolutely elite. The only reason it's not automatically S tier is the recent spin-off of its consumer business and ongoing litigation drama. But still, J&J remains A tier and arguably one of the best dividend stocks ever created. Dividend stock number 5, Coca-Cola. We can't talk dividends without mentioning Warren Buffett's favorite cash machine. Coca-Cola is like the godfather of passive income. The company has raised its dividend for 62 straight years, and it basically invented the boring but insanely profitable model. A lot of people underestimate Coca-Cola because the stock doesn't move much year to year. But that's the whole point. Coke shareholders make money from dividends, dividend increases, share buybacks, global dominance. One of the strongest distribution networks in history. Here's the crazy part. If you invested $10,000 in Coca-Cola 30 years ago, with dividends reinvested, you'd have over $120,000 today. And that's with a business literally selling flavored sugar water. Coca-Cola is a borderline S tier, but I'm putting it into the A tier for one reason. There are even stronger dividend stocks coming. Dividend stock number 6, Chevron. Chevron is the quiet brother of Exxon, not as flashy, not as famous, but arguably more disciplined. Chevron has raised its dividend for over 35 years straight, and unlike Exxon, Chevron managed its capital better, avoided massive catastrophic acquisitions, and generally ran a cleaner balance sheet. But it's still an oil company, so the roller coaster effect is real. Long-term returns are strong, but not elite. Oil businesses always have that what if demand goes down forever? Cloud hanging overhead. Chevron joins Exxon in the B tier. Reliable income, but not top-tier compounding. Dividend stock number 7. Altria, Philip Morris/MO. Say what you want about the ethics, but historically, Altria has been one of the greatest dividend-paying stocks ever. It has delivered massive cash flow, enormous yields, decades of dividend growth, and some of the best long-term returns in the market. If you put $10,000 into Altria 30 years ago, you'd be sitting on more than $300,000 today. Dividends reinvested. That's absurd, but here's the problem. Cigarettes are declining, regulation is tightening, and younger generations simply aren't picking up the habit. So the question isn't, has it been great? It's, can it continue being great? And I think long-term, the answer is maybe, but not guaranteed. So Altria, despite its legendary history, is an A-tier dividend stock, not S, still elite, but cloudy future. Dividend stock number 8, Procter & Gamble. Now this is an S-tier contender. P&G is the company behind Tide, Pampers, Gillette, Crest, Gain, Pantene, Old Spice, Bounty, Charmin, Febreze, Dawn, Olay, and dozens more household brands you literally see every single day. This company has raised its dividend for 67 straight years. It has survived the dot-com crash, the financial crisis, inflation waves, COVID supply chain chaos, shifts in consumer behavior, global competition, and nearly every economic shock imaginable. Here's why P&G is different. People buy toothpaste, detergent, and diapers no matter what's happening in the economy. It's the ultimate sleep well at night stock. $10,000 invested 30 years ago, over $200,000 today with reinvested dividends. This is an easy S tier. One of the true kings of dividend investing. Dividend stock number 9, PepsiCo. Pepsi is a sneaky S tier contender, not because of Pepsi, but because of everything else they own. PepsiCo owns like Gatorade, Lay's, Doritos, Cheetos, Quaker, Tropicana, historically, Mountain Dew, and more. People forget this is a snack empire, not just a soda company. Pepsi has raised its dividend for 52 years and delivered some of the most underrated compounding in American corporate history. It's more diversified than Coca-Cola, it's more stable, it grows faster, and it has stronger pricing power because people are addicted to chips. Long-term returns? $10,000 to $170,000 plus. Pepsi doesn't get enough love, but it absolutely deserves it. This is S tier, quiet, consistent, powerful. Dividend stock number 10, Microsoft. Yes, this might surprise people. Microsoft is best known for being a tech giant, not a dividend stock, But here's the thing. Microsoft has raised its dividend every year since 2003. It has one of the strongest balance sheets in the world. Azure is printing money, and it's one of the few tech companies that perfectly blends growth and income. It's not a high-yield stock, but it is one of the greatest dividend growth stocks ever. Long-term returns are absolutely insane. $10,000 invested 30 years ago would be worth over $2 million today. Even though the dividend yield is small, the overall compounding power puts Microsoft in rare company. Microsoft goes in the S tier, not because of high yield, but because it's one of the greatest wealth-building machines ever created. Final rankings overview. Here's where everything landed. S tier: Procter & Gamble, PepsiCo, Microsoft. A tier: McDonald's, Johnson & Johnson, Coca-Cola, Altria. B tier: Exxon, Chevron. D tier: TNT. Notice how there's no C tier? None of the companies we covered today are that mediocre. They're either dependably or disappointing. And that wraps up the ranking of the greatest dividend stocks of the last 30 years. And let me know down in the comments, which dividend stock is your personal S tier? Do you agree with my list, or would you move anything around? And if you want a follow-up video breaking down the best dividend stocks of the next 30 years or the highest paying dividend stocks right now, just let me know and I'll make it happen. Thanks for watching, and I'll see you in the next one.